In her 2024 budget speech, the finance minister revealed that 2/3 of taxpayers have shifted to the new tax regime. Chances are you too have opted for it or are planning to do so in the next financial year, as it has further sweetened. Now, we know that the new tax regime has lower tax rates but almost no tax deductions or exemptions. However, the new tax regime offers one prominent deduction, the deduction for the employer's contribution to the NPS under Section 80 CCT2. Now, this deduction has been raised from 10% of the basic salary to 14% in the union budget only for the new regime. So, for someone with a gross salary of 25 lakh and a basic salary of 12.5 lakh, this implies a tax deduction of 1.75 lakh as against 1.25 lakh earlier. At 30%, that's a saving of 15,000 rupees more in taxes. But to get this deduction, you need to first understand how the corporate sector NPS works. Hello and welcome to ED Money's YouTube channel. Today, we are going to talk about the corporate NPS. Now, we have covered the government and all citizen NPS models in the past. I have mentioned their links in the description. If you are interested in them, you can watch them too. Now, we've divided this video into certain sections for ease of navigation. You can either watch it from start to finish or jump directly to the section of your interest by clicking on the timestamp links in the description. Alright, let's begin with understanding what the corporate NPS exactly is. Introduced in 2011, the corporate sector NPS is the model of the NPS that caters to organizations and their employees. It is available to any of the entities mentioned on your screen. Now, to avail the corporate NPS, you must be employed by a company that has registered with the NPS and hence offers it. In other words, if your organization doesn't offer the corporate NPS, you cannot invest in it. Hence, the first thing you need to do is check with your HR team if your company offers corporate NPS or not. Now, in addition to the corporate NPS, the NPS offers other modes, including the central and state government NPS and the all citizen model. As their name suggests, only central and state government employees can invest in the central and state government NPS respectively, but anyone can invest in the NPS through the all citizen model. Now, as of August 31st, 2024, the corporate sector NPS's AUM was about 15% of the total NPS AUM of 12.66 lakh crore or about 1.94 lakh crore. This AUM is almost 3 times that of the all citizen model. Now, since FY21, the corporate NPS AUM has risen by over 3 times. This speaks volumes about its rising popularity among the salaried. So, how can you contribute to the corporate NPS if your organization offers it? Let's see now. The corporate NPS provides 3 variations of contributions from the employer and the employee. Equal contribution by the employer and the employee, unequal contribution by the employer and the employee, contributions from either the employer or the employee. So, here again, you will need to check which variation your company has opted for. A corporate NPS subscriber can also voluntarily contribute to the NPS apart from what's mandated by the organization. The minimum contribution required in the corporate NPS is 1000 rupees per financial year. The employer or the employee can make this contribution. Next, let's check the investment options available in the corporate NPS. Like other models of the NPS, the corporate NPS also offers 2 types of accounts, Tier 1 and Tier 2. Now, Tier 1 is the mandatory account which also offers tax benefits. Tier 2 is an optional account. It's up to you whether you would like to open a Tier 2 account. Now, the Tier 2 account can be opened at the same time as the Tier 1 account or activated later. A corporate subscriber can activate the Tier 2 account through the associated KRA websites, which is Protean, KFintech and CAMS. Now, KRA stands for Central Record Keeping Agency, and NPS KRA is responsible for the centralized record keeping, administration and customer service functions for all NPS subscribers. The Tier 2 account enables a subscriber to invest and withdraw any time in the available scheme, similar to investing in mutual funds. Now, to know more about the NPS Tier II account and how it compares with mutual funds, you can watch our video on NPS Tier II versus mutual funds. Alright, let's talk about the Tier 1 account now, which is the main NPS account and which also offers tax benefits. The Tier 1 account offers two investment choices, active and auto. The active choice allows you to decide your asset allocation, while the auto choice automatically adjusts it as per your age. The Tier 1 account offers four investment schemes, E, C, G and A. This stands for equity, corporate bonds, government bonds and the alternative investment fund. Then there are 11 pension fund managers who manage these schemes. Their names are on your screen. Now, in the corporate NPS, the investment choice, the scheme preference and the pension fund manager can all be set at the corporate level. So, if your organization does so, there is nothing you need to do. But your organization can also provide you with the flexibility to invest your money the way you want. In that case, you can select the investment choice, the scheme preference and the fund manager. Your organization also has the flexibility to change the investment choice, scheme preference and the fund manager if it wants. Now, many organizations just ask their employees to share their existing NPS account numbers, and those accounts are mapped to corporate NPS contributions. So check with your HR team on how corporate NPS works in your organization. Now, if your organization provides you with flexibility of choice and you would like to know more about investment choices, schemes, and the best pension fund managers, you can watch our earlier NPS videos. I mentioned their links in the description. Next, let's talk about the tax benefits of investing in the corporate NPS. Now, as we discussed at the beginning, if you have opted for the new tax regime, the employer's contribution of up to 14% of your basic salary is tax deductible under Section 80 CCD 2. For those who have opted for the old tax regime, corporate NPS can offer three benefits. First, your own contributions or the employee's contribution in the Tier 1 account is tax deductible up to 1.5 lakh rupees in a financial year. This comes under the overall tax deduction limit of 1.5 lakh rupees under Section 80 CCE. Second, under Section 80 CCD 1B, you can claim an additional deduction of 50,000 rupees by voluntarily investing in Tier 1 account of the NPS. This deduction is over and above the 1.5 lakh rupee limit of 80 CCE. Third, as in the new regime, the employer's contribution is tax deductible under Section 80 CCD 2. However, the maximum limit for such a contribution in the old tax regime is 10% of the basic salary and not 14% as is now the case in the new regime. But do note that the employer's contribution of only up to 7.5 lakh rupees in a financial year is exempt from tax. For contributions over this amount, no tax deduction is allowed. Next, let's talk about withdrawals, exit and transfers in the corporate NPS. So what happens to your corporate NPS account when you switch jobs? Well, it continues to remain mapped with your previous employer and you will need to transfer it from there. Now, just like your PAN, you can have only one PRAN or permanent retirement account number. So if your PRAN is currently mapped with an organization, you have to get it transferred. So you can do two things. First, you can approach the HR or the accounts department of your new company and check with them if they also offer the corporate NPS. Now, if they do, you can ask them to use your existing NPS account. Your company will raise a request with the NPS and use the same NPS account to make contributions. Second, if your new company doesn't offer the corporate NPS, you can transfer your NPS account to the all citizen model. Now, one can do so by using a feature called inter-sector shifting or ISS. It's available online on CRA websites too. Now, what if you do neither? Well, in a March 2021 circular, PFRDA, the pension regulator, suggested that companies complete the ISS process as part of their exit formalities. They can also flag the PRANs that are to be de-tagged to a CRA or POP. Now, POP stands for Point of Presence. POPs are entities appointed by PFRDA to provide service to all Indian citizens for opening and operating their NPS accounts. They have a network of branches called POP Service Providers or POPSP. Once a PRAN has been flagged, the subscriber must exercise the choice of the POP within 3 months. If a subscriber doesn't act, the PRAN will be tagged to the respective POP of the employer under the voluntary or the all citizen model. If the employer doesn't have a POP tagged to it, the PRAN will be tagged to eNPS under the voluntary section. Now, in another circular issued in September 2022, the PFRDA said that when the inter-sector shifts from the corporate NPS to the all citizen model, the subscriber will be allowed to retain the existing investment choice, scheme preference and fund manager. Of course, you can change them too if you would like to. Now, the rules related to normal exit, premature exit, partial withdrawal and withdrawals due to the subscriber death are on your screen. You can pause the video to read them. Now, after reaching 60 years of age, you can even defer your withdrawal until a maximum of 75 years of age. And after reaching 60 years, you can even withdraw the lump sum portion systematically through a feature called the SLW or Systematic Lump Sum Withdrawal. Now, most of these options are available on the CRA websites, so you can exercise them online. Alternatively, you can get in touch with your company's HR or the accounts department. All in all, the corporate NPS is a promising option, especially if you have opted for the new tax regime. It can help you save tax and build a retirement corpus. Now, another plus of the corporate NPS is that your company's HR or the accounts department takes care of much of the documentation work. So just like EPF, that makes things a lot easier. And with this, we have come to the end of this video. I hope you found this video useful, and if you did, please don't forget to share it with your friends and family. I'll be back soon with another video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.